Good evening, traders. Today is Wednesday, February 22nd. Markets have been closed. I intentionally waited for this evening's futures to play out. We're going to start the evening backwards as far as the most recent data, and then we're going to get into intraday action as it happened. What you see on your screen right now is just pay attention to this pink line right here. See that? This goes back to the February 16th trend line. It's right here. That's right there. Okay, I call that the downtrend line, the pink line that I like to draw intraday. Okay, so you got that picture? It's just a pink line. That's it from February 16th. This is futures tonight. It took it back. Right there. That's what you're looking at. It took it back tonight. It was messing around with it right here. See that? See, going up against it, going up against it, going up against it. Boom, took it. So that's where we are at right now. It took it back. And that's what I thought was going to happen intraday today. But of course, FOMC threw a wrench into that. Not really a wrench, but a wrinkle. That's more of a wrinkle, not a wrench. What have we now learned about FOMC? It's a pump, dump, pump. Well, actually, it was kind of a dump. Pump, dump, pump. So, basically what we are looking at is, so when it took that trend line tonight in futures, that's what I thought was going to happen right here. Okay, right here. However, based on previous FOMCs, I should have figured that out. But moving forward, I am going to be clued into that they plan to go ahead and dump it first, take money from the bears, and then overnight rip it. Now, there is conclusive evidence. The market makers already knew the NVIDIA earnings. Why? Because right at close, it rocketed right up to the EMA 50 line that you guys, you existing listeners, know that I always say, if you take that line back intraday, that's a trend change. Okay? Like it did right here. It did it. Okay? Immediately at close. Immediately, boom, rocket, and consolidate, consolidate, consolidate. Because what happened when NVIDIA released their earnings? It just rocketed straight up. They were consolidating under the EMA 50 line, waiting, already knowing what NVIDIA was going to do. Okay? So, this is just manipulation by the market makers to take money to trap the bears again. This whole move right here was just a big scare because they were planning to take this thing up all along. This morning's episode, I just didn't know the sequence they were going to do it. But now they've hatched their plan. They were actually going to wait until NVIDIA earnings after hours to continue this uptrend. So, basically I sent this tweet out. I just said, you guys, next time I want you guys to remind me, because every single time now, anything related to FOMC, anything related, it's a pump, dump, whatever you want to call it, doesn't even matter. Okay? So, that's what happened. Now, you can't quite, it's stopped fall. Now you can't see this notch. You'll see it in another slide. Well, actually, it's right here. But we'll get more in the details of that in a little bit. So, I also sent this tweet out. So, you know, on Twitter, we were talking a lot about the daily moving average, the 50 moving average, whatever, and then we always talk about the weekly EMA 50 on this channel, you know, and also SPY weekly EMA 50, whatever. At the end of the day, and you're going to see this in the tweets, it came down once again to the MACD. It came down to the MACD. It told the truth as it has done every single time in the past, every FOMC meeting, whatever, any event that was a binary event where it's like it's going to go up or it's going to go down. And that's pretty much FOMC during the trading hours. So once again, the MACD delivers And so I know I've actually gotten comments from more than one. They're like, why do you use the MACD? That's like a lagging indicator. No, it's not. No, it's not. It is a real time. It has saved my hide every time without fail. Okay? So you guys don't have to use it. That's fine. No problem. You can use your McClellan oscillator. You can do the Ron Walker awesome oscillator. Whatever oscillator you want to use that works for you. That's fine. That's fine. But I'm using it. I'm using the MACD. That sucker is a staple in my trading strategy. So, this is just the intraday 5-minute chart here. Now, okay, we are 2:07 p.m. We're getting more to the meat and potatoes. I don't have it on the screen, but I have it right here in this tweet. You can kind of see it. I'm drawing. I had to go to yesterday around noon time. We'll just call it late morning. I had to reference yesterday's MACD low to compare it to today's MACD low. That's what I had to do to figure out what the market maker was doing. I couldn't rely on this one because if I had relied on this one, look at that. So, oh, that's a lower low, right? So, no, I had to go back. I had to go back even further. You can kind of see it right here. That's how far back I had to go. And what did I find? Okay, yeah, is this it? MACD higher low from yesterday? So this was as the data was playing out. That would have been right here, right at this time when I sent that tweet out, right here, right? It was still higher than yesterday. So all eyes on yesterday. Okay, you can kind of see it. Yeah, see yesterday's low, the MACD was negative 0.63. Today was negative 0.62. And the RSI never went below 30. Well, let's see here. Oh, that's interesting. Yeah, it's right here. Right, as it was carving out this low right here, right here, right here. It didn't go below 30. Okay? And I kept looking. I actually had both the screen up at the same time, just looking left, looking left, looking left, just watching that MACD right here. Okay? Basically, the MACD double bottomed. Basically, when you're talking about negative 6.3 compared to, oh, okay, no, actually, it ended up going, see, it was negative 6.2, but then it went to negative 6.3, and a double bottom is bullish divergence to price, because as you can clearly see, that price from yesterday was coming down, coming down, coming down, coming down, coming down. But the MACD double bottomed, that's bullish. That's bullish divergence. Oh, here I'm just saying, yeah, the MACD is almost at a positive cross, as we now know it eventually did. RSI is above 30. The 1 hour. Yes, this would end up being key. Hold on a second. Well, you can kind of see. Here we go. The 1 hour MACD never negative crossed below the signal line. That was the key. That was the key. So now the 1 hour did kind of tilt down below the 30 line, but as you know, that takes an hour to finally solidify. So it can tilt, but as we now know, it didn't ever go below 30. But the 5-minute did not go below 30 at any time, even though it got nasty. That's telling. That's what I look at. I was like, I don't think so. The MACD double bottomed. So, okay, yeah, here I'm just calling this out right here, lower low, right. Yeah, here we go. There's lower low right there. at the time. And here was the MACD at the time. It held it this slight notch. That's it. That notch stopped it. It's, yeah, when the notch completed itself, it stopped it. It stops the fall. That is the key that I always emphasize in all my episodes. It stops the fall. And what happened after that? Boom. Oh, yep, here, more or less same thing. Quietly, discreetly carved out a bottom. You did it. In the final, we'll just call it 15 to 30 minutes. I don't know the exact time. Well, these are 5-minute charts, so 5, 10, 15, 20, 25, 30. Yeah, we'll just call it 30 minutes, whatever. 30 to 45 minutes. After all this falling, you know, in the afternoon and last night and the day before, right there, that was the notch that stopped it. It stopped it. And as you now know, what you saw earlier, the uptrend now passed the pink downtrend line. And so what you're going to see in a little bit is all of this was hidden strength it had all along. This down move was just manipulation to take money from the bears. That's strictly all it was, because it showed flashes of strength, hidden strength, in this move right up here. The whole time I was like, now you'll see the tweets when I get into more detail. But I was like, no, this is legit strength. This is not, man, that was a huge short squeeze going up. No, this took it back old school. So, oh yeah, actually we're at the beginning now. So now we're at the end where we talked about this. Now we're at the beginning right here. This was like, oh, there's no timestamp, but um, it was first thing in the morning. It's completing the down leg of the higher low notch on the 1 hour. What I'm talking about is this. This is the down leg. So this is the down leg, right? So overnight it was kind of up, but it needs to come down to create the higher low notch to stop this downtrend. And that's what it did. It stopped it right here. And that's when it turned and went up. So at this time, as it was going down, I'm scaling long. It's at the true bottom. MACD bullish divergence, RSI higher or low, not going below 30. Yeah, well, this is in the morning. You can't quite, this goes off the screen. But this is a higher low compared to yesterday afternoon, which is what it would have been right here. See that? This is the morning right here. That's yesterday afternoon. That's higher low. Oops. Oh, sorry. No, it would have been, yeah, there you go. That's a higher low. Would have been right here, not right here. This is at the end of the day. So I had to draw this red channel trend line in right here. You can't see it right now, but it was right here. That's what this dash line is right there. The reason why you would know that's the bottom, once again, went below the channel trend line, came up, rocketed back up. And you have MACD higher lows to confirm. But the main thing is you went under a channel trend line again, once again, every single time. This is always in the market maker's playbook. Always goes underneath that thing and then comes up and rips it up. That's why you have to know where the lines are, the major lines, not every single line, like not, oh, where's the 30-minute SMA 20, like what a bit, that's right here. You know, it's like, no, this is a major channel trend line, that red dash line. So, I mean, there you have it. Time and time again, it respects those lines, went down, boom, rocketed back up. The bottom is in. That's what I called it right here. That's the bottom. That's the bottom. And it was until FOMC minutes were released. And then, but like I said, this whole thing is manipulation, because futures tonight is right back up, continuing this trend. So Wyatt on Twitter, he was observing weird movements right here. Yeah, he was talking about this. It was just weird, kind of jerky, schizophrenic. I call it schizophrenic. Just jerky. Move down, move down, move down. Come up, move down, move down, move down. Come up, come up. It's just totally different look than yesterday. Totally different look than yesterday. And so it's my opinion that yeah, when it starts to move like that, it's near the bottom. But you got to look at other indicators. You can't just look at the movement by itself. You got to look at, well, yeah, I'm seeing bullish divergence on the MACD. I'm seeing other indicators like RSI is not going below 30, but yet you see these jerky kind of weird movements. So that in total, when you look at other things, um, being that you've uh, been consolidating under this band right here all night. So yeah, that's what I said. I was like, yeah, you're near the bottom. You're close. You're close. Once again, this thing came down, and it didn't even. I was looking for it to backtest the EMA 50. It didn't even do that. I was like, you're near your target when you do that. When you don't try to backtest against a major line like the EMA 50 right here, you didn't even try to backtest anything. I was like, yeah, you're close to your target. That's why, and it was. It was right there. Okay, so here, right here, that's what this tweet is. It's starting to go old school. Here's the EMA 50. Comes up, consolidate, consolidate, consolidate. Come down underneath the SMA 20. Consolidate, comes up, consolidate, consolidate, consolidate. Boom, takes it. That right there is demonstration of strength. Despite a crazy red day the day before, that is hidden strength. The market makers cannot hide. That's how that's how it clues you in. You're like, no, because I can tell you unequivocally from December 14th all the way up until January 4th. I know those dates by heart. From December 14th FOMC all the way to January 4th, 2023. It did not take back intraday the EMA 50 line in that time frame. That's how you know it's going lower. When intraday, it cannot take it back. But yet today, despite a huge red day yesterday, and then it just kept going down, down, down today. Oh, it just took it back. That tells you all along, ever since the decline from February 16th or the 15th or whatever it was, all along, it has the strength to do a trend change. It was just masking it, and it was taking it down to just retrace, and now it's going back up. All along, it had the strength. This is not a same comparison to December 14th to January 4th at all, when we had the down move, because it took it back the next day, even despite the Dow yesterday being down almost 700 points. A huge red day. Next day, took it back. When I say took it back, I'm talking about this right here, this move. Boom, 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 took it back. It had the strength all along. It shows it to you in how it takes back these EMA lines and how it consolidates under lines like this. How it just consolidates, because that's always bullish. Anytime you're consolidating under a major line, like this band from the 2011 blue line and the one-day EMA 50. Okay, this is not all just this is not make believe. Like I saw one commenter say, "You just arbitrarily choosing some lines." No, these lines are there, man. You just need to look. Okay. So here we go. When it was consolidated right here, what did I? Yeah, right here. It was. Oh, I think it was this candle. I said, oh yeah. I said she's gonna rip. Look at the consolidation under the EMA 50. Under again. And what happened? Boom, 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 boom. She's gonna rip. She's got the strength. This is the hidden strength that the market makers cannot hide. No matter what happens with price action, doesn't matter. You cannot hide this strength. It's like, oh, this is, you know, and just the fact that despite going down, crazy down, crazy down, crazy down, all the way down to the limit. Oh, at the last second, let's just bust up here and start consolidating under the EMA 50 again. Yeah, okay. That's not something that you oh yeah, we're going down. So once again, oh yeah, here we go. This is what I talked about earlier. Oh yeah, right here. Let's first talk about that. Anytime you're consolidating under the EMA 50, you don't even bother touching the SMA 20. You don't even require that for support. That's hidden bullishness. Hidden bullishness. You always have the strength all along. You just the market makers chose not to exercise that strength in this past few days. It was just, we'll just take it down, take it down, take it down, take it down. But then all of a sudden, boom, you rip it up and you start going up. Yeah, you were playing possum. You were playing possum. And now I heard from other people on Twitter, Ron Walker is predicting a rally. Ha ha ha. Wish you would have seen some of my videos that I've been calling for in the past January and February. Instead, he was calling it a sucker's rally, a bearish hangman prophecy. Okay, so January 4th, we took back the EMA 50 intraday, and that's what this is right here. You took it back intraday. So it has the strength. It took back the downtrend line in futures tonight, and in my opinion, that had nothing to do with NVIDIA. They were already planning on doing it. They were just using this as an FOMC excuse to take some money, and then they were using NVIDIA to rip it back up. So that's what I think it is. And see, as you guys know, I don't follow the news. I don't follow the FOMC minutes. I don't care. But yet I'm able to trade just fine based on technicals. Okay? Because the market shows you its hand. It shows it to you. It shows you what it can do before an event like FOMC minutes. It shows you what it can do. That's why you don't need the news. You don't need to try to guess either. I had no idea what NVIDIA was going to do tonight. But because the fact that it showed strength up here, now I'm not surprised at all. It rocketed up here and it's consolidated under the EMA 50. Not surprised at all because you already showed the strength earlier. You don't just loot. And this strength that you showed was a day after the Dow was down 700 points in the red. See what I mean? It was playing possum. So, this was earlier. Oh yeah, this was right here. Yeah, right here. Right here. Yeah, it's just taking its time, looking to take back this blue line, which it did. It took that back, and eventually got up to here. Here's the blue line, right? Well, yeah, right here. Here's the blue line that's in that tweet. So, yeah, why clear this range now only to crash it through below at 2 p.m.? Yeah, I was talking about. It's like, why would you come up here and then crash? Well, it did it, but now, obviously, it's FOMC. It's pump, dump, pump. What did you expect? That's exactly what you got last time, too. So, okay. Yeah, a couple things. This is evidence. Market makers have already decided ahead of the FOMC minutes what it's going to do. The news, to me, it's completely irrelevant. So you're going to tell me after all this Russia stuff, yesterday, all that news, oh, it's so bad. It's so horrible. FOMC minutes is whatever. Okay, well, you still took it up, took it down, then took it back up. That's got nothing to do with the news, guys. It's already in the algorithm what it's going to do. It's already there. It shows you its hand when you read the if you're able to accurately read the strength, you don't need to know the news, what it's going to do, or what it's capable of doing. What it's capable of doing. So, yeah, okay. Well, I was just essentially all of yesterday, all of last night, overnight and morning, and all of today is one big consolidation pattern. Look at that. Under the band. Under the band. Came up, messed around, came down, rocketed back up, and then overnight, boop, took it. So it was just one major consolidation pattern. Nothing to do with FOMC. Nothing at all. It was already consolidating since yesterday. Look at the pattern right here, guys. And as I showed you, look at this pattern. Consolidate, 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 pop. Consolidate, 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 consolidate. Tonight in futures, pop. What's that got to do with FOMC? Nothing. It already made its decision what it's going to do. It's just the sequence by which it does it, that is unknown. But the decision is already made. Regardless of the news, regardless of what Russia wants to say be ahead of Biden's speech, like who cares? See what I mean? It already targeted these levels. Already targeted them. It's just using news as an excuse so to do it, but it was going to do it no matter what. But it had the strength all along. It had the strength all along. Here I was just talking about right here, bullish, perfect consolidation under the 1 hour SMA 20 line. Yeah, it was right here at the time. It was right here. This is like perfect. Look at that. Perfect consolidation. Wake up. Wake up. Consolidate, consolidate. Boom. You don't do that when you're weak. You don't do that when you plan on taking this thing lower. Oh, no, you don't. Yeah, and see, look at that. Look at this. Doesn't even bother touching the SMA 20. That tells you how much strength, hidden strength, it really has. That's what I look for. I don't just look for price action going up. I look for, well, where are you relative to the SMA lines? Where are you relative to the EMA lines? Do you even need support? Where are you consolidating under? See, those are all the things I look at. Then I look at the MACD too. I'm like, is there bearish divergences going on? Where's the MACD relative to the zero line? Is it above it? Is it below it? What's going on with it? All these things fit together regardless of the news. It's just straight technical because I firmly believe, because this has been shown time and time again, not only do the market makers respect 100% these lines, which I saw a comment that says I just arbitrarily pick lines. I just wish you knew. I wish you would just actually open your eyes, bro. Okay? I don't just randomly pick these lines. These lines are drawn in from other chart time frames. Okay? So you can determine the strength and how it interacts with these lines. You can determine the what it's actually probably anticipate what it's going to do as well. So, yeah, not even touching this. But if you don't have these lines, you'd have no idea whether this thing's going to fall, whether it's going to keep going. You're just like, I don't know. Anybody's guess. Okay, so this is basically the last slide. T minus 5 minutes, showing classic backtest position. That would have been right here. Yeah, right here. T minus 5 minutes, but we all know what happened. Manipulation, take it down. Okay, so this is SPY Futures 4-hour chart on the left-hand side. October low through December, well, through January. Negative on the 4-hour chart, negative 35 on the MACD is the bear line. You can see here. This is the October right here. This is October 13th low right here. That's the hive. It touched that bear line, but then it rocketed up. Touched it, rocketed up. Came just below it. I remember this. This is for like this was FOMC right here. This is FOMC, November, October, November. It came down, 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 down. Yeah, it came down below the negative 35 bear line. But then what happened after that? Consolidate, 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 rocket. Okay, so you got your, see the negative 35 bear line? This is where we are today. It's now curling back up. It's at the negative 24 bear line. It's not the bear line. It's at negative 24. It's not anywhere close to the negative 35. So as you see, you have to go below negative 35 to make the next move down. And we're not anywhere close. And as you guys already saw, that 1 hour, it's almost back to the zero line. So that means this 4 hour is going to start curling back up, going this way. And it's an open question that I think that this could be the logical conclusion of what started on, this was like December 19th. This was the low on December 19th. And we are now at February 22nd. We'll just call it 2 months. This is the conclusion. This is the conclusion of what started on December 19th here. And if this thing starts to curl up, that means we are starting a new cycle. We could be starting a new cycle. That does not include going down. That's what I'm saying. You got Ron Walker now talking about a rally or a bounce. I don't know. That's what somebody on Twitter told me. I didn't actually go and watch his videos. So this is just one final thing. There's actually a big difference between a 60-minute chart and a 65-minute chart. I was astonished when I charted them side by side. Look at the difference. Huge night and day difference. It's not even the same. You wouldn't even think that's the same chart. But it matters. 5-minute matters. Because 390 minutes, which is 6.5 hours in a trading day, divided by 65 equals 6. 390 minutes divided by 6, oh, I should have been 60, equals 6.5. So I'm showing this because I use 65-minute charts because my trading platform lets me do it. But if you have no choice, you have no choice. You got to use this one. But it's a huge difference, as I'm showing you here. A huge difference. Not even the same. No, it's not the same. It's not the same. I mean, you got 2 red candles here, but you only got 1 here. Huge difference. Huge difference in how to interpret that. Because, yeah, you know, obviously that's a higher low right there. And that's a lower low right there. Like, hello. That's not the same thing at all. And this is a wick up from the SMA 20 line, right? But that, you know, that shows something different. So that's what makes, I just wanted to show you that because, yes, it makes a difference. Put that debate to rest. 60 minutes versus 65 minutes, it makes a difference, okay? So feel free to follow me on Twitter where I give real-time tweets like today as the markets were going down during FOMC. Don't forget to listen to your favorite music as you are trading, as it helps you get into the right state of mind, helps you get into your flow state to achieve your Zen. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 00 Woe, signing off.